The goal of charting is to separate the signal from the noise. My friends, the signal is actual price movement. The noise is all the volatility and everything else that goes on to distract you from actually following what's really happening. That is why we practice every day. That is why we keep our indicators limited to just three things: to the price, to the volume, and the price via the Heikin Ashi candlesticks, the volume being the volume indicator, and of course the trend line being the weekly trend line. To add on top of that, the real magic here is what we do to limit our losses and let our gains run. How do we do that? Well, we use the average true range on the 2-day chart. And when we enter a trade, when we see something like high volume with a bottom, then switching over to something like a spinning top with higher than average volume, showing us that we've had a potential bottom here, then we see things start to take off and run. We go ahead and set our loss point at 1 time the average true range on the 2-day chart. Then we set our first profit point at that same number, of course, in the direction of the move. When we hit either the loss point, we close the entire trade. If we hit the profit point at 1 time the ATR, then we cash out half of our trade and we let the rest of it run for as long as it runs. And then we have any number of ways to get out. You can get out when it goes from being the candle in the right direction. You can go out when it breaks the trend line and closes below it. There's any number of things that you can do. But again, the trick is to have a plan, work that plan, limit your losses, because that's the number 1 and number 2 rules of trading is first, do not lose money. And if you do lose money, of course, you want to close that trade and minimize it. So the first rule and second rule are don't lose money. Third rule, make money. And I guess if I said the fourth rule, let your profits run. Cut your losses, let your profits run. It's just that simple. And over and over and over again, if you will practice this and prove it to yourself, you can see it. Now, if you just start throwing real money at the market, you're going to get hammered. You're gambling. I urge you instead to go to Vegas because you can see a show as you're losing your money. Here, you'll just grind in your pajamas and watch your bank account be depleted. So dress up, go to Vegas if you want to gamble. Now let's jump into these charts. This is a day where everything is up. Look at the S&P. Look at that nice big candle moving up. Look at the volume. It's still just a bit below average, but it's still got another day to move. We'll see what happens on Friday. You can see on the 2-day chart, as we have had things continuing to move down now again, this is just the first day of the latest 2-day candle. It may blast out on this latest one here, but you can see price well above on the 2-day and the half-day charts well above that weekly trend line. The NASDAQ 100, and again, the S&P was up 0.54. That was the S&P's up 0.54. NASDAQ up just 0.12. But again, nice green up candle, just below average volume with 1 day to go. We can see on the 2-day as it's been moving down in volume, as the price has been moving up. We can see where things paired back at the end of the day. And of course, that's on the half-day chart. Half-day well above the weekly trend line, as is the 2-day. So market just continues to go up. What about bonds? Up for the day 0.65%, but you can see on the half-day where bonds are just sliding along sideways mostly. Up some in the morning, down some in the afternoon. Not much going on that 2-day candle or that end of the day half-day candle. And we can see last week the low was 93.26. This week the low 93.10. So it's gone a few cents lower. And again, bonds have been edging down over. This is going into the 4th week. Look at the volume. So we'll see how the market ends up tomorrow. I'm looking to see if there's any place it could. You can see here before where we jumped in and had a decent trade at 2.45% down. but you can see it went down and sort of, I mean, it stopped right in here. It's almost at that point. Is that going to be another point where it has a hard time crossing back through? It eventually did. And again, we found another spot to grab a 2.10% and then let those profits ride. You might say, Tom, how do you make money when the market's crashing? Well, in bonds, again, we have inverse funds that we look at to practice trade. TBF, that's the opposite. So look at what TBF has been doing, and it is the ProShares short 20-plus year Treasury, U.S. Treasuries. It's been going up at about the same percentage as TLT has been going down. Now, there are more fees involved. It's something you should practice and see how well it does for you. If you start using the highly leveraged, the 2X, 3X, whatever, you'll find more fees, more volatility, and if you bet the wrong way, and I don't like to use the word bet, if you enter a trade the wrong way, your practice trade will go south very, very quickly, perhaps even before you can try to correct the damage. So practice these things, see what you like. Now, let's move on from bonds to gold. Gold up for the day 0.40%. We've not hit the low of last week this week. You can see that we're on par right now for the volume below average of last week. Still have another day to go. As we look, we can see gold's down movement has slowed and slowed and slowed. Of course, for 2 days now, sort of sliding sideways, hitting around the same points. So again, we'll keep an eye on things. Gold bounced off what we had found to be a ceiling going all the way back to May of last year. So we'll keep an eye on gold. If it stops moving down and starts to go up, we'd love to see it blast through this ceiling of sorts and then just take off. That would be fabulous. We'll see if and when that occurs. Lastly, we'll look at Bitcoin, up a little bit for the day, 0.66%. But of course, you can see as Bitcoin has just been sliding sideways down here at this bottom. Did hit a lower low for the week. Volume is just below average, but one more day to go. We'll see if the volume pops up and clears the average mark there and just what it does to end the week. I'm hoping it's going to roll back for quite a while, reset nicely, and give us a good jumping in point as we move into the future. Let's look real quick at the 24-hour-a-day Bitcoin chart. You can, of course, see here how Bitcoin has been moving down for these 2 weeks. You can also see how it has been moving down on this half-day chart. And you can sort of see where it is now on that 24-hour-a-day chart, just looking at 195 minutes at a pop. It's sort of been at that same spot after it dipped to its low back on Tuesday in the afternoon. So again, you know, I like to switch back and forth and look at how the 24-hour-a-day Bitcoin chart is doing as compared to this ETF. So that is where we are, folks. It's so great to have you with us. We always appreciate your questions. Don't hesitate to reach out to us, cw@chartingwealth.com. Patreon members, we have already posted for you at the Patreon page, Charting Cryptos, Commodities, and Currencies. We'll release the rest of that to the rest of you tomorrow, and also your exclusive 3-wave trades. And we will be posting here in just a few minutes your weekly vertical crossovers for this week. Those are stocks on the the S&P 500 that are either going on the weekly from green to red or red to green. We try to help you by looking at the volume and taking that into account in the ones that we list. And again, we give, if we have 20 a week, we give you 20. That is where we are. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.